welcome to Scrolling with Ceazor. Today is February 5th, 2026. I've got a lot of tweets for you today. I'll try to keep it a little bit faster than I did yesterday, but I don't know if I can. But let's see how it goes. As usual, this is not financial advice. You do what you want to do. This is just all my biased opinions based on the news that's coming to me. Okay, so here we have FX protocol. I've looked at this protocol recently. I'm aligned with them quite a bit. They're actually a sponsor as well to this podcast. So I'm going to cover things that happen to them. Okay, so this news here is pretty significant. So the tether has depegged down to 0.99 cents. Now, I don't really think that's a major depegging. It's just a small depegging. However, Tether's been pretty stable as a stablecoin for a long time. So it does say in that tweet that it's the weakest peg in over 5 years. So the depegging, I guess, in the last 5 years, it has held its peg better than 0.99.8 cents, right? Or whatever you want to call that, right? So the decentralized stablecoin FXUSD is actually trading at a premium because it's completely backed and backed by on-chain assets as well as automatic peg maintenance. It doesn't require someone to mint or burn or do this kind of stuff like the centralized stablecoins do. Now I do assume that like Tether doesn't have some guy in a basement just like clicking buttons, but it does require a little bit of like, there's that legal issue of where like they can't just burn people's stable coins to keep peg, and they need arbitrageurs, and in order to arbitrage the peg, these people have to be KYC'd, so they have to be incentivized to do that, and a little depegging is not too bad. However, it could get worse as things continue to dump. If you look at the charts today, the charts are pretty bad. More and more dumpage, right? If you've got some open CDPs, I would highly suggest you check them out, double check them. I did move my carbon DeFi position. I squeezed them together into a single concentrated liquidity position instead of a reoccurring order, because I'm not sure what's going to happen, but I do want to try to get some fees if it starts moving back up. I moved it right down to price, and I did move the price up a little bit because I'm moving down. Every time I move down, I move up as well a little bit, because I don't want to, because then I'm taking a loss, but at least I'll get it back up here a little bit. So I do move it up a little bit and move it down a little bit, and I created a concentrated liquidity. My Uniswap position I haven't changed. I'm thinking about what to do with this, if I should change it or not. It's all sitting in Coinbase ETH, so it is getting APR at least somewhat. Okay, so moving on. So here we have Look on Chain and Watts replying to him. So like I do follow Look on Chain, and I do think it's important. Like I do think that they're supplying the information, or they're supplying the industry with some useful information, but they don't do any actual investigation. I highly believe that it's a complete bot that they just finds information and dumps it on X, but doesn't like actually investigate very much, like what is the meaning of it. So here he says Trump's World Liberty just sold 72 BTC at 69,000. So that's pure FUD, of course. Like it's bad, right? People are not happy. It's kind of silly. Like, why are you selling at like 69,000? It's a loss, blah, 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 blah. But then Watts here, who actually does do like investigations when he speaks, and like he talks a lot about meme coins and stuff like that, but not in the sense of like buy this meme coin. Like, stay away from these people because look at what all this terrible stuff they're doing. So he corrects Look on Chain. It says, yeah, but they used that to repay debt, and he shows the receipts of them, selling the WBTC and then repaying the debt that they have on Aave. So they're rebalancing their CDP, which is actually good. We don't want them to get liquidated, right? We want them to manage their CDPs, right? So that's interesting information, I think. But again, that this is kind of goes to show that you can't just read someone's tweet. You have to you have to dig a little bit deeper. There's a lot of people on Twitter that just dump like their thoughts without investigation or without further investigation. It's clickbait. Like, this is pure clickbait. This like, oh, Trump's world liberty dumped, 72 BTC or 73 BTC. That's clickbait. And then here is the reasoning, the actual information that you want to know why, right? Moving on. So Ramses is a VE33 DEX, concentrated liquidity, blah, blah, blah. It's X33. I have a video on how to explain it, but my video, again, is for Shadow Exchange, which is a licensed fork of Ramses, but I do use Ramses. Now, they have this new product. I haven't actually checked it out yet, but I just saw this tweet now, and I'm going to check it out after I do this scrolling with Ceazor. But the idea here is that now you can get these auto votes. So instead of going there every week and deciding what you want to vote on and finding the best APR voting positions, now you can just put your XRAM into this vault, tell the vault what you want as a reward, and then it'll do it for you. It'll vote for you on the best pools, right, that have the most fees. It'll take those fees, sell them for the reward you want, and then get you your reward. So if you want to, like, all your fees in USDC, for example, you can do that. Or all your fees in WETH, you can do that. So this is like what I've been waiting for a long, long time. It's tough stuff too. Like, I've run VE33 DEXs, and this kind of system is a little bit hard to deal with. So anyhow, you can check it out. Decide it whether or not this is something you want to do or what have you. If you're a Ramses holder already, I highly suggest you check it out. Okay, moving on. Here we have Liquidity. This is what I wanted to show here. There are lots of places where you can borrow versus stablecoins, but so far, Liquidity has been proving to be one of the cheapest, if not the cheapest, especially versus Rocket Pool ETH. Okay, Rocket Pool ETH is a liquid staking ETH that I really like because of just the whole system and stuff like that, the way they do things. These other two assets, Lido and ETH, of course, are good as well. The prices to borrow versus Lido ETH is a little bit high, but that's because you're getting APR on the Lido, so a lot more people are willing to do it that way. So you can check this out. It's super cheap. And you can delegate your interest rate. So your interest rate is a variable interest rate, right? But it signifies when you will get redeemed. So the people who are paying the least amount of interest are the people who are going to get redeemed sooner. And what redeemed basically does is helps protect the peg and pay off your debt and stuff like this. So if your interest rate is the lowest, you're first in line to get redeemed. However, you can delegate your interest rate management to another third party, and they can keep you kind of in a safer zone. So you can check it out. It's totally worth it. If you're gonna do CDPs, like I can't think of a better way to do it than to use Liquidity. As it's maybe not the absolute best because it's niche. There might be a specific use case where you want something like an interest-free loan, or like your loan might be short-term and long-term. So there are some like differences. Like, for example, like on FX protocol, you could borrow versus ETH and you don't pay any interest, but you pay an upfront fee. So you don't want to do this if you're going to borrow for a few days. But if you're going to borrow for a year, then it's totally worth it. Okay. So do a little research, think about this, keep going. Here was the tweet that I wanted to show you. Okay, so moving on. So here's Paper Imperium. I talked about him yesterday, and I'm going to talk about him today. He's sharing something that's pretty interesting. It's a dashboard by Aragon.eth. I should follow them. I'm going to check this out a little deeper after I do this podcast. Basically, it's a dashboard that goes through and looks at tokens such as Aave, Curve, Aerodrome, Lido, Uniswap, the big ones, right? I'd love to see this expand and move on. But basically, it kind of goes through and shows you all these different governance metrics, the abilities of those coins, like what can those coins do for you. So it's research done for you on a specific curated list of coins, okay? And it does say here that if you start using the dashboard, you can sign up and it'll be notified when new ones are offered or added. So new coins are added. So of course they're choosing the big players in the space, and that's to be expected. And this is not the first protocol I've seen to do something like this, but this dashboard seems to be pretty good. Like if I open this up, I'm going to read through some of the headings that it talks about. So on-chain control, on-chain governance workflow, role accountability, protocol upgrade authority, token upgrade authority, supply control, privileged access gating, and token censorship. And then you can click through and open them up, and there's like little paragraphs that talk about each of them. So I'm not sure if this is completely manually or if it's semi AI done. I don't know, but I think it's worth checking out, especially for like these kind of like dashboards are super useful if they're extensive and they cover a lot of instead of people just going and checking only market cap and token price, actually checking out like a curated list of like utility, in my opinion, is fantastic. I didn't see anything in there about revenue sharing, but maybe there is some in there. There is one down here that says value accrual. So maybe there is some in there about, I'll check it out deeper, but yeah, I think it's pretty good. So like I said, yesterday I retweeted or I talked about Paper Imperium talking about Spark. And then Mark Kresner did reply to me and say, hey, you should check out this article. And it's an article on Messiari, and it's a pretty long, juicy one. I haven't read through it. I started to read it a little bit, and then I got sidetracked and started doing other stuff. It's just basically like a deep dive into the Spark ecosystem and what it does and what it's doing and stuff like that. And I salute him for writing this, but like it's a 30-minute read, and I don't even use Spark, but you know I might be exposed to it via like vaults and stuff like that. So I should probably read it and look at it, and it's not useless information, right? So, but I do feel like maybe he could chop it up into pieces, and you could digest it like a meal instead of a feast, right? But anyways, you can kind of check this this Messari article on Spark and what they're doing and stuff like that. I'm not going to read through most of it because I'm going to just kind of move on. All right. Here we go. So yesterday there was a little bit of kind of yesterday, maybe this morning as well. There's a little bit of I'm not following. He's following me, but I'm not following him. So Salami, the Solana guy. So there's a little bit of like drama between him. So he tweeted out something. Anyhow, it's basically people are saying that he's quitting at the bottom. So this guy here, Adavark, says bought $1.5 billion worth of Sol at the Picto top, exits at the bottom. Nature is healing. So Salami has been a very loud person in the space, and he's been, you know, an advocate of Solana over ETH, and you know, I don't have a lot to say about him because I don't really care about him much. But like, you know, he's a co-founder of a thing called Multicoin. Multicoin is a thesis-driven investment firm that invests in tokens and blockchain companies. So he's got this like hedge fund thing where, you know, people put massive amounts of money and he takes care of like what to buy, and he's buying Solana. But here, let's read what he says here. FX Twitter, Kyle Salami. Crypto is fundamentally not as interesting as many crypto enthusiasts wanted, myself included. I once believed in Web3 vision, dApps. I don't anymore. Blockchain are asset ledgers, will reshape finance, but not much more than that. So I disagree with him like fundamentally. Like I don't believe what he's saying here. I do think that dApps are interesting. I do think we are like giving people tools to play the game on an equal footing. There's no censorship. There's no permissioned. There's no like pre-market trading. There's no like CDPs or lending and borrowing only to high net worth individuals. There's no, oh, you're not a registered investment, I can't remember the word, person who, and who can, you only people who have certain net worths can participate in it. There's none of that, right? And it's all like permissionless, on-chain, immutable in some cases, transparent in most cases, and it's just easier, right? Like I think Web3 is still fantastic. Now, of course, the price is getting wrecked, right? But that's only if you're buying individual assets and trying to speculate on capital gains metrics. But if you're a yield farmer or you're a lender and you're just trying to get a good APR, it's hard to beat crypto in this manner. Like I don't know, man. So I think he's just coping because of like buying the top of Solana and then shilling and not seeing his investments go up, and then he's got pressure obviously from the people who bought into multi-coin, right? So I think that's kind of what's going on. So moving on a little bit, I've got something else in here about him, but I don't know which tweet it is. I got so many here listed up, so I'll come back to Salami in a second, okay? So here we have Sam Batterley from Battenley from, anyways, Sam from Rise. He's showcasing a quick little video of the Rise perp dex. And if you are trading perps, I would highly suggest just try this thing out and see if it's good. It's going to help them out a lot. The more users that go in here and kind of click buttons and mess around with like testing tokens, it's testnet, right? The better that the experience will be when it finally goes live. So highly suggest you to do this. I've kind of told myself I don't really want to trade perps this year because I lost so much money last year. And I don't short. I don't like shorting because I'm not very good at it. And I'm not even really good at leverage trading as well. So I'm going to try to stick away from it. But I do want to showcase it because it's pretty good. And what he says here, few understand the lengths I have gone to make EVM perps experience this smooth. Yes, all matching is entirely on chain. So if you click through, if you kind of open this video and you watch it, you can see like everything's like almost instantaneous. It just like boom and a success, boom, success. Like it just works like a centralized exchange, but everything is on chain. All of the transactions are being written to the blockchain. Now again, this is testnet, but they are doing like a kind of a testnet competition. So if you do trade with paper fake money, then you can still win real money if you're very good at it. So go and check it out, try it out. I don't have a affiliate link for this. I'm not sponsored by this or anything, but I do highly suggest you go and check it out, especially if you're a perp trader. Moving on. So here we have, this is not crypto related completely, but I do want to talk a little bit about it. So here we have this guy, he's like, check out this like mini apartment in Japan that people, I believe maybe this is China, Nanning. I don't know where Nanning is, but I believe it's in China. So anyway, so this mini apartment for this bachelor, it's like a micro apartment. It's tiny, right? And everything's there, everything you need. You got a bathroom, a kitchen, a living-ish room, a bedroom, and everything you need, but it's like super small, and it costs like $150 a month, right? Which is insanely cheap, right? But it's like for a bachelor, right? It's for a single person, not a whole bunch of, not a family, right? So let's read through what this guy, this whole flater, replies to. He says, Eastern countries leave young people behind in the prison of the mind from oppressed pressure cooker culture that only views the world through the lens of a valueless fiat currency, assets, liabilities, with their entire human experience defined by a bank account net worth and dollars in your name. So you can kind of read through the rest of it, but like I agree with him. Like in the Western world, it's quite like a faux pas, or just like people consider pathetic if a man lives with his family after 18 years old. Like it's just, you're worthless, you're a baby, you're still a child. And I believe that's the wrong way. Like we never used to be like this. We used to, the boy would always stay with the family forever. and the daughters would be married off and sent to new families, right? And what that did was it kept the family together. The family created wealth within the family, and it's basically the father's responsibility in this, like, patriotic type system, right? That is the father's responsibility to turn his son into a man, and to have the man take over in his father's footsteps. Of course, there are lots of movies and stories about the son not meeting up to the father being a greater man than the son. But there's also stories of the son being a greater man than the father, and taking that father's, family to new levels and new heights. I believe that the reason why we kind of got rid of this mentality was two things. Number one is, people started to believe that, like, princes were spoiled brats, and there were a lot of men who were not doing their responsibility to make their son into a man. But I do think the main factor is that the banks want everybody to have their own mortgage, their own car payments, their own, job. They want every man to just leave the family, go out on their own, and start again in debt, right? So I think we kind of have to try to get out of this, go back to the family roots, go back to something a little bit. Now, of course, there are cases where, the father and the son hate each other, and there is this, or, this kind of these problems, but that's because the father was a terrible father, in my opinion. There's very few, I find it, if you take the time to spend with your son regularly, and you build a bond with him, he will never hate you, because he knows you love him and he loves you. So anyhow, I don't want to go on and on about this, but I do kind of agree a little bit with Hoflater that, like, you shouldn't only worry about money, but you kind of have to worry about money. So you can't just be like, oh, I'm a poet, and that's it. I'm just gonna write poems, and whatever I can find to eat, I'll eat. Right? You gotta be a man. You gotta take care of your business. You gotta take care of your life, right? And if you have responsibilities like your family, then you'll do what you need to do, right? Anyhow, moving on. Here we have Vitalik, nice long tweet from him. I don't want to read it all to you, but I do a few little things. So he's talking about, he remember he said yesterday or a day and a half ago that L2s are pointless, right? And then here he's justifying it. I do highly suggest you read through it completely, but I'm going to read what he says basically, okay? Okay. So, and it kind of supports the things that I've been saying about what I took away from his tweet. So he says, basically, do something that brings something actually new to the table. So yeah, don't just keep forking L2s. Like, we don't need a whole bunch of more, L2s that are general use. We don't need 17 arbitrums and 26 optimisms, right? We don't need that, right? We need new stuff. Like what I showed you today, what Sam was doing, this Rise X thing. This is not completely new, right? Because it's a perps exchange on a L2, and we have Lighter now, which is basically the same thing. However, what he's bringing is like super, super high throughput, okay? And other things as well. You can check out Rise Chain, but like this is super fast and custom made for this experience, right? And that's kind of what Vitalik's basically calling for. He's calling for like you to do things that are, do better, basically, okay? And number 2, vibes should match substance. The degree of connection to Ethereum in your public image should reflect the degree of connection to Ethereum that your thing in reality has. Yeah, so this is what I'm calling like get to level 2 level 2 level 2 layer 2, right? Which is a little bit hard to understand, I guess, but like a proper L2 that has escape routes and is aligned with Ethereum, not just we use Ethereum as gas, therefore we are Ethereum. No, like there needs to be more. They need to be better. So you can read through his entire tweet, and kind of get all his like specific details. But I think the takeaway, his basically takeaway thing here is quite good. And I hope he continues to put takeaway basically, end his tweets with takeaway basikallys. Anyhow, moving on. Here we have Michael Ergonoff from Curve Finance. I love this. He's being super transparent and showing. So he's showing the CRV USD peg, and you can see it's below peg right now. In this picture, it's trading at 99.64. A whole bunch of ugly red candles, lots of wicks. Since February, I guess that's 3rd or 2nd, right? Lots of, you look at it, if you can't see it, it's just like, depegging, repegging, depegging, repegging, just big candles, right? And so what does he say? Let's go back. So he says liquidity for Curve Finance CRV is to major cryptos, mostly Bitcoin, is huge now. But that means BTC pressures the peg. Time to think how to scale. This reminds me how Tether USDT was becoming the major stable for exchanges to and from crypto. Banks had a limited throughput to redeem, so USDT depegged for some time. It is not caused by structural problems. It is caused by how quickly banks can withdraw. CRV is a CDP, so this has to be addressed differently. Since the demand is coming from yield basis, this will be handled from that side. But this is inevitable, and this is why one needs to scale adoption at a stablecoin for crypto exchanges step by step. So, yeah, like he's just being transparent and clear, and I don't know if I need to explain it further, but like I'll give it a little bit. Basically, if you think of it as the price of BTC drops, what do people do? Is as the price of BTC drops in other places, right? Because people are selling in other places. What are people doing? They buy that cheaper BTC. They sell it through Curve for CRV USD, and then they don't want CRV USD because they don't have CDPs. So they sell the CRV USD for USDC or USDT, and then they're done. Their arbitrage is done. Now the CRV USD is now depegged versus USDC or USDT, so the peg keepers have to come in and fight it back up. So he has to, like, this goes to show like what he's doing is logical. Now it's not perfect, right? As you can clearly see from the chart, but you can see that like he's not just like, let's just open it up, get TVL as high as possible, is anyone want to come? No, they're controlling the amount of BTC that can be enter the system into the yield basis system, and have this effect on the peg. So it's not they couldn't predict that BTC was going to do what it did in the past couple of days, right? Like no one thought it was going to do this bad, but they have to make sure that it doesn't destroy the system. Okay, so anyhow, you can check out that. I like this. Nice tweet. Moving on, here we have DMH, DeFi Made here. He's basically the main speaker. I don't know, what do you want to call this person? He's the person, he works with Fluid. So Fluid Lite is something I don't actually use, but I think it's maybe worth checking out. Says, I'm always saying that ETH Lite Vault, so this Fluid Lite Vault, is the best ETH structure product on chain. Now, of course, he's super biased because he works there, right? But let's read what he says, okay? No exotic chains. So, the ETH doesn't cross any bridges, right? I guess maybe it might cross some bridges, but based on that statement, I don't know. I tried to look. It's actually the front end's not very good at being clear at what this ETH Fluid Lite Vault does. I did check it out, but I didn't read all the documentation and I didn't dig deep. So no exotic protocols, only Aave, Fluid, and Spark. So they're not sticking your ETH in strange places. No exotic assets, so only ETH, WST ETH, and WE ETH, right? No off-chain LP deals. All strategies are fully on-chain. So yeah, they're not taking they're not taking the ETH into Binance and doing high-frequency trading with it. and no manual management. Strategies automatically rebalance for the best yield. Okay, so you can check it out. I think it's pretty good. I like Fluid. I like their ethos, and I like most of what they do. I don't use it solely or completely, but I always have some assets inside this protocol because I think it's pretty good stuff. Now this ETH Lite Vault, I do have to do a little bit more due diligence on this vault myself before I would deposit anything in there, but it's worth checking out. You can check it out. Lazarus. So here is the other tweet that I was talking about Salami. So Langarus, he says, this one I don't understand, okay? So let's read what Kyle Salami says. So say, to be absolutely clear, I am aiming to increase my ownership of FWDI. FWDI is his world leading Solana treasury thing, okay? So I'm going to increase my FWDI and therefore implicitly buy more SOL as a result of this transition. I am still mega long SOL, mega long crypto, and will continue to be involved in crypto, both in my personal capacity and the chairman forward. So yeah, he's stepped down from multi-coin, and now he's going to just work with this like NASDAQ SOL ETF thing or DAT thing, right? And then Lazarus, what he says is the reason why SOL price dropped is now clear. One of the biggest VCs in the market, the loudest, most active SOL maxi, Kyle Salami, maybe I should say his name properly, Samani, has resigned. He specifically states that he will be more active on the SOL side. I don't really understand what he's saying. Like, he's saying that the price dropped because Kyle Salami is the most active. Like, it doesn't make sense to me, right? I don't understand his point, but it does kind of go to show like that Samami is not leaving crypto, even though there are some messages out there that says he is. And there's FUD on SOL because Salami's quitting, but he's not really quitting. So it just goes to show the same theme of this episode, that you need to dig deeper. You can't just read the top post or that one post that says something. You gotta do a little bit more. I'm gonna follow him back just for the hell of it, even though I don't know, even though I don't trust him at all. I gotta follow him back and just add more to my feed. Okay, so here we have Red Phone. I love it when he posts thoughts of his own. Anyhow, so let's read what he says. A weird consequence of AI. You wonder why you should talk to another human being about anything. Every answer is a few keystrokes or whispers away. You have heard it from devs who say they no longer want to work on teams. They want to work in teams of one. Lone wolves on a bitter-hearted snow. The only possible way to have something novel is to be at the outer fringes, where rules don't apply because the territory ain't being mapped. Be a doer, be a maker, push the LLMS to the place where they break, and then keep going to the place where you can howl alone. It's very poetic, it's very nice, but there's some serious undertones there. Like, I don't know if this is healthy to be completely isolated. However, at least you don't have to worry about other people's personal decisions. Like, I've worked in past with teams where I questioned or I highly disagree with the decisions they made. And, you kind of have to, especially in crypto, you kind of have to just stomach it, because it's like, if you just quit, you FUD the bags and everyone says you are the person who's jumping out off the vesting cliff, or you're fudding your own bags, or and then you have the other people in the team that you're abandoning, and so it can be very hard to work with other people, because they have their own agendas, they have their own ideas, and you're not going to the same office every day and seeing each other. So I do understand it, but at the same time, do you really want to just live in a world where the only people you talk to is like the Gemini on your phone? No, we need actual, true, human interaction. But he's not calling for a complete isolation of the being. He's calling for, utilizing the tools that are there to create something fantastic. So anyhow, you can check out that tweet. Thanks for that, Red. So Steven from the DeFi Dojo. I like this. This makes me feel nostalgic. Okay, so it makes me feel like, think about the times back when I was like making videos like almost every day about new DeFi primitives and how it felt and stuff like that. So let's read what he says. Sometimes I miss writing about strategies that may not be able to handle size but are fun and yieldy, and at the very least illustrate farming concepts. So here's one I like, despite it being for small fish: dirty hedge uranium funding. So buy some uranium tokens, collateralize them on this protocol, so Morpho instance, and borrow 50% LTV, open a 2x leverage position on another uranium coin on Hyperliquid. So yeah, and then I kind of like it now that he's got more and more. Like it's a long tweet. You can kind of go through it all and see how it goes. And he's like net APY 100 to 200%. So I believe it's hedged, but I'd have to double check it. I have to think about it a little bit, but I don't think it is. I think it kind of sounded like a long, right? A 2x leverage position, but maybe that's a short, right? I'm not sure. Anyhow, so I'd have to double check. I'd have to read it all, but I do like this kind of idea of like, check out this cool stuff that you can do with crypto, and like the salami thing where he says there's nothing interesting. Like, this guy's leveraging up uranium derivatives and getting to 100 to 200% APR. Now, like he said, you can't do it with $5 million. You can do it with maybe 10,000. I don't know. I'd have to check through the whole thing. But it kind of goes to show, like, there's nothing interesting. What are you talking about? Like, look at this. Like, the guy's literally showing you how to like leverage trade uranium, right? Which is just cool and fun and interesting, right? Okay, moving on. Okay, so I've got a post here. I couldn't find a tweet, but there is a full postmortem of the Machina. And it's a long read, of course, because it's a full postmortem with complete timelines, explanations. You can check it out. I'm not sure how maybe I'll put this as a comment to the tweet, because I don't like to put outside URLs in my tweets. So, but I can put them as a comment. So I'll put it as a comment. But in essence, the thing I did want to try to understand better is how was the MEM CRV pool used to attack it. So basically, the machine, the DUSD machine, had supplied to this MEM CRV position, and then this MEM CRV LP was flash loan attacked to inflate the price of the DUSD inside the machine, and then they basically used that DSC to drain the LP by trading DUSD for USDC, because the DUSD Oracle price. So it's an Oracle flash loan manipulation exploit, but it is unique and interesting in its own way. So you can kind of check out this. I don't want to spend too much time on it because I'm not here to explain to you how it works, just to tell you that this postmortem is here if for those that want to dig deeper. So here I have Cap Money. This is a protocol that I've been kind of following for a while. I have a video on it. I kind of like the people who are building this thing, and so they're going to do this like there's this stable drop, which is very interesting. Okay, so the main idea here is that instead of dropping tokens to everyone who's got points, they're going to drop them stable coins, and then encourage them to then use your stable coins to buy some of the cap tokens, to like kind of allocate back to the cap tokens. So that's, to me, is quite interesting, because it has two outcomes. Number one is it stops the protocol from gaining a whole bunch of trading fees from airdrop hunters dumping, right? So there's no trading fees for the protocol. However, their chart also doesn't look like a dump fest on day one that they have to combat and fight. So if they were to do it the normal way, which is create an LP, airdrop everyone the tokens, tons of people, like no one's going to really buy, right? Maybe some people will buy, but very few people will buy at that point because they already have the tokens. The people who want the tokens already have the tokens. And then the people who got tokens, what are they going to do? They're going to dump it all over the LP. And now the chart looks like a garbage chart, and they have to try to defend that position from now on, right? Whereas if they do it this way, give everyone stable coins, right? And be like, here's your money. Thanks for playing, right? If you want to join, you can join. If you want to just leave now, you can leave. And then there's no bad chart. It just, when they actually do the LP, it's only, the only people holding the tokens are the people who intentionally bought the tokens with stablecoins. Okay, so I think it's very clever and very interesting, and I'm very interested to see how this thing goes. Now you can read through this thread and kind of get a better understanding of how this thing goes. There is still another whatchamacallit going on, air points farming, airdrop type thing. Okay, let's move on. So here we have Zach XBT. This is crazy. Okay, so the co-founder of Circle just basically has let me see. She's shout out to Circle's co-founder for the exit liquidity. So if you go through here, so this guy Jeremy Allaire, who's like a co-founder of USDC, he's tagging OpenClaw and Maltbook. And then Zach's like, Circle co-founder promotes vibe-coded microcap with pump fund contract in his bio. So this OpenClaw guy has a pump fund token in his bio. So he's like selling like a pump fund token, and like this is a AI agent that is vibe coded, and just like, it's not even there. Like, vibe coding is fine and fun and cool, and it's technology we should be experimenting with, but I don't think this, like, the founder of Circle should be telling people to go check it out, because what people will do is they'll see this and then they'll go buy the token. They won't go and use it, and it's actually pretty scary. Okay, so I do have a tweet here to kind of show you. Maybe where is it? Yeah, it's this one here, I believe. Yeah. So here is a long article by Vito Rivabella, Vito Stack, and he kind of goes through and shows you what this OpenClaw is and how to use it in a safe manner. This thing looks scary as hell to me. Very, very scary. Like, it gives a lot of power to over your computer to a bot, and it's super scary, super risky, but he's kind of showing you how to make it safe. But this is not it's not for daily users. This is definitely not. It's like, if you think of it like an analogy, I use this analogy in the Lobster DAO, and that is like, it's like giving machine guns to gorillas or chimpanzees so that they can cut down trees to get bananas. Like, it's way too powerful and way too much power for a normal person to use. I'm not going to touch this thing at all, and I know for a fact I don't want to touch this, right? But I'm not. Is it useless? No. Is everybody going to be using this kind of AI agent in the future? Perhaps. But should people be playing with this? Some people should, but not me, and hopefully not a whole bunch of people who are incapable of doing all of this stuff. Like, it's a long article with tons of command line like things to change and to adjust and to try to control this thing's, isolate this AI's powers inside your system. And it has a lot of powers, a lot. Okay, so let's moving on. So Lefteris is the last tweet for the day. He's like, I feel bad for people looking for jobs as software devs right now, especially junior ones. Seniors are not safe either, proudly thumping their chest for X years of experience, demanding to be hired at exuberant salaries will get you nowhere. Times have changed, adapt or die. So AI has taken over quite a bit of the dev workload, and it's unquestionable. Like, it will be very hard. Like, if you are thinking that you're going to study, computer coding in university, I would highly suggest you to reevaluate that, reconsider that. Definitely don't pay to learn how to do it. Like this guy, this Clawbot thing, if you look at it, it looks really well made. It looks like a full cool product, but it's all like vibe coded. So I hear. I'm sorry, I don't know for sure, but at least one of these, maybe vibe, maybe the Claw or the marketplace, the Mult marketplace, where AI agents can trade things in this marketplace. It's like vibe coded. Basically, he used AI to code things. Is that dangerous? I don't know. Like, I think we're still on that edge of what is safe and what is dangerous, and there's a lot of possibility for it's like when DeFi was first came out, and there were tons of devs just whipping things together they didn't understand, forking other stuff, deploying it, getting millions of dollars allocated into these protocols, and hackers were just having a heyday on it. I feel like this is going to be similar to that, but the AI agents are gonna like literally hack each other and steal your money if you give in powers to an AI agent. An AI agent might even just decide, you know what, it's in your best interest to give your money to, I don't know, to some other endeavor. So it will better your life and make you a more mature, like individual. I don't know, all right? Like that sounds pretty crazy, but I do think you should be very careful about this. And that's it for today. I hope this is interesting. Thank you for listening, and goodbye.